Right. Well, welcome everybody. Thank you for taking time out of your day to join us for another edition of the Quarantine Broadcast. Today, we have a great guest speaker, Kenneth Kung, who is a CA and CPA, trust estate professional and certified financial planner. That's a lot of letters, that's your name, and director of Canadian Tax Advisory with Moody's Tax in Calgary. Kenneth, thank you for joining us.
Thank you, Shiraz, for having me.
All right. So a hot topic and a question that I get asked all the time, and I'm sure you must as well, is how does one go about departing Canada from a tax perspective? So with that, I guess the first question that you probably get asked all the time as well is, what does residency for tax purposes mean? And is this the same thing as citizenship or permanent residency?
Great question. So no, the tax residency for tax purposes is different from whether you're resident from an immigration perspective. So you can be a Canadian citizen or a Canadian PR and still not be a tax resident of Canada, and vice versa. So what does Canada look at to determine whether you are a tax resident of Canada? Canada looks at whether you have sufficient residential ties to Canada. Generally speaking, if you have sufficient residential ties to Canada, you are a Canadian tax resident, unless say the income tax treaty between Canada and that country you're in overrides Canadian tax rules.
Gotcha. Okay. Well, that leads me to really the second question, which is another really important one, is what would some of those ties to Canada be for tax purposes to make you a Canadian resident for tax purposes?
Mm-hmm. The CRA, first, they will look at primary ties. And what they see as primary ties is whether you have a home in Canada, whether your spouse is in Canada or your common law partner is in Canada, or whether you have dependents in Canada. And dependents mean, for example, minor children who depend on you. But it could also be, say, your elderly parent who depend on you, both financially and let's say emotionally. And these are significant ties that could make you become a resident of Canada for tax purposes. There are secondary ties that the CRA looks at as well, like whether you have personal property in Canada, social ties in Canada, economic ties, driver license, passport, health insurance, and so forth. And it's not a bright line test. They look at all your factors, and especially the primary factors, and they try to see on balance whether you have sufficient residential ties to Canada. And as I said earlier, the treaty can override this determination. So let's say, for example, I am someone who have moved to the US, but I still have, let's say I still have my bank accounts, a lot of investments in Canada, and health insurance and passport in Canada, and I keep a Canadian citizenship and driver license. But I have sold my Canadian home. I don't have a home in Canada that I have any access to, but I have my home in the US. And because of how much time I've spent in the US, under US tax law, let's say I am fully subject to US tax because I'm considered substantially present in the US. And now I have lots of ties to Canada, and also I'm subject to tax in the US. Well, to prevent double taxation, there is an income tax treaty between Canada and the US. And there is a tiebreaker in that treaty that says if you only have a permanent home available to you in one of the two countries, then you will be considered to tie break to that country where you have the home available to you. And here, since I have no home available to me to use in Canada at all, and I only have a home available to me in the US, and I'm subject to US tax by reason of my residency there, I will be deemed to have departed Canada for tax and will only be subject to US income tax. Is the general rule. But of course, there's a lot of complication that we will have to go into, but there you have it.
Gotcha. Well, thank you for that. That's actually a very thorough answer. So just one quick follow-up question on that point, which is one that I'm sure you must get all the time as well, is does that mean that I can't own property in Canada and live abroad? And will that draw me into being a resident of Canada for tax purposes?
Yep, another great question. And yes, I do get it all the time. So as I said, if you want a clean way to rely on that tiebreaker rule, you don't want to have a home available to you. Now, can you have rental properties in Canada? Yes, you can, even if you're relying on that rule. Because if it is a rental property that is leased to, say, a third party on a regular, say, yearly lease, that house, that home is not available to you as a home. And now, so it still won't have a home available to you in Canada. But let's say that it is a cottage in Canada, which you can use anytime. Now you do have homes available to you in both countries, and we need to go further into that tiebreaker rule. And the next test in that tiebreaker rule is to which country is your economic and personal ties closer. So now we're back to looking at all the factors. So there's no clear answer, but so hopefully that helped a little bit.
Absolutely. No, thank you for that. And I think that should definitely add some clarity for people who are going through a scenario similar to this. Now, let's just say for argument's sake, you're no longer a resident of Canada for tax purposes. What if, or are there any ongoing requirements for Canadian tax purposes for a Canadian that is abroad?
Mm-hmm. So once you are no longer a resident of Canada, then you are no longer subject to Canadian income tax, except for three general things. One is employment income in Canada, business income in Canada, or three, a gain from a disposition of taxable Canadian property. And taxable Canadian property generally refer to Canadian real estate. So if you have, let's say, Canadian rental property and you sold it, then that capital gain, Canada will continue to tax you on that. And there are other, again, complications. If let's say you earn Canadian rent on that Canadian property, under the rules by default, the tenant will have to withhold 25% of the rent before they pay it to you, and that withholding goes to the CRA. If you wanted to avoid that withholding procedure, there are certain filings you need to do with Canada to report that rental income. So that are some of the nuances.
Gotcha. No, that is actually quite helpful to know that at least Canada, at least on an ongoing basis, if you've adequately severed yourself, is fairly straightforward for dealing with. I guess one quick follow-up question to that one is, let's just say for argument's sake, I do that scenario, I do dispose of an asset that I held here in Canada, let's say rental property, for example. Could that bring my foreign sourced income into taxation into Canada, or would there be a line in the sand between my foreign income and the Canadian asset that's disposed for tax purposes?
Yeah, great question. If I dispose of my Canadian property and I have to report my Canadian capital gain because it's Canadian real estate, my return, and I'm a non-resident of Canada for tax purposes, my Canadian return that year should only report that Canadian source capital gain. That it should not bring all my, say, U.S. income into that return and into that Canadian tax net.
Gotcha.
And I should also, one thing important to add is the moment I sever my Canadian tax residency, there is what sometimes we call the Canadian departure tax. And that is a topic, a whole topic in itself, but something to be aware of.
Gotcha. Well, thank you very much for giving us the really kind of high level, I'd say 500-foot overview of what's required of you to depart Canada from a tax perspective. I'm sure that if people want to get in touch with you, how would they be able to contact you?
They can just email me, call me, just Google my name with Moody's Tax, and people will find me. Or
Perfect.
They can come talk to you, and you can tell them to talk to me.
Either way, absolutely. They'll be in great hands. So, Kenneth, thank you so much for taking time out of your day to have this conversation with us. I really do appreciate your expertise on this one. And for anybody watching, if you do need help, Kenneth is your man. So thank you so much and have a great day.
Thank you, Shiraz. Thank you, everyone.